In this video, we are going to talk about various terms that are used in context of share market which can be confusing for new investors. Let's begin with an asset. Simply put, an asset is anything that you can buy and sell in the share market. It may be equity, fixed income, contracts, commodity, and more. Every asset has its price that you need to pay in order to buy or sell it. This price has three directions. It can either go up, it can go down, or it can keep on oscillating in a price range. These price movements are referred to as price behavior. The price behavior of an asset is the foundation of the share market. But why is that? This is because it forms the root of all other terms, studies, and analysis in the share market. Next up, we have a time interval or period. Time interval is applied to the price behavior to give it more sense, and now we get a trend. A trend gives us further insight into the price behavior of the asset. A trend is nothing but the direction of the price of an asset in a certain time interval. There are three general trends: uptrend, downtrend, and oscillating trend. For example, when you want to buy an asset to hold for a long period of time, you would want a price behavior that is spaced out over a longer interval of weeks or months. Whereas for day trading, you would want a price behavior that is spaced out over a few minutes or hours. Once we got these right, next up is momentum. Momentum is a term that supersedes trend but essentially has the same meaning and has two subparts. We often hear two terms with respect to a share market, that is, bullish and bearish. Bullish means that the price of an asset is in uptrend over a time interval, and bearish means that the price of an asset is in downtrend over a time interval. Both of these terms indicate momentum in the price of the asset, whether it is in favor of bulls or bears. The change of momentum from bullish to bearish or from bearish to bullish is called a trend reversal. And finally, we have the tipping points: overbought and oversold. The term overbought is used when the momentum of an asset remains in favor of the bulls for a certain time interval, and that there could be a trend reversal, which simply means that the price of the asset can fall in the future sessions. In contrast, oversold means that momentum of an asset has been in the favor of the bears for a certain time interval, and that there could be a trend reversal and the price of the asset may rise in the future sessions. These were some of the terms that a new investor would find helpful before starting the share market. Also, it can be noted that these terms are not only used for an asset, but also for broader market and benchmark indices as well. These are no investment tips, but an informative piece and should not be used to take a call in the market. Thanks for watching.